All right. Hello, hello, hello. How's everybody doing today? Oh, everything's going off. All right. So, um, yes, yes. Uh, Hold on one sec, guys. Remaining to 12, 1, 2. All right. Sorry. There we go. Let's put this on. All right, so Kip will be coming in here pretty soon. So, anyway, tons of movement out there in the markets. Obviously, we knew it was going to be this way. There's no no ifs or buts about it. We talked about the kind of bang bang back and forth. Dollar stuff, we kind of knew what was expected. Powell said exactly. I'm going to have to come up with a list. What he said was more eloquently than what I was saying, but he basically said the same thing. Like it's too soon to pull off. To halt what we're doing. Said exactly kind of what we were talking about yesterday. And again, we talked about the pound, and we talked about pound weakness coming in, even though there was a raise. And how about these numbers? 312 or 320, 344, 118 in the euro pound, right? Massive pound weakness, even though they just raised the interest rates. And again, that's what we talked about. That is the, third or fourth setup like that we've talked about now, where we were looking to get short into the release. And again, they all worked out great. The dollar one took an immediate drop and then obviously went crazy. We'll show the V effects on almost all of those out there. And with that said, again, unemployment claims came in basically as expected. Nothing really, no major news there. And then we'll get services at 10 o'clock today, and we'll kind of see where the market kind of, rallies it out. So, obviously these are all crazy moves, but again, the 0.75 was a big move. And again, with that said, we know that, the Fed is like, no, we're not slowing down yet, which again, I didn't know why the market was kind of assuming that, like, that's what's happening. It's wishful thinking, right? Wishful thinking. But now the real question is, what the heck? Where do I just want to know? And I feel like this is almost like one of those, I don't know, kind of like the death roulette things. What does the interest rate look like by the end of the year, right? Or for like housing, right? What does the mortgage rate look like? It was below 7 before this one, right? It's kind of like, oh, we got to make it, so people can get into housing, right? But at the same time, it's they can't lower it below what the actual interest rates are, right? So, you want to be like, oh, we'll take less profit on this one, right? Because they make money off the difference, right? But yeah, it's gonna get fun. Again, I will say that I felt like some of the headlines that I've seen, not too political. This is kind of not, this crash right now and the continued path. I think it's good that the Fed didn't kind of just give in and be like, well, maybe we'll pause next time. Like, they didn't give kind of that, that kind of, stay in the whole thing. But it's interesting. Bailey's data, right? If we do not forcefully, act now, I mean, these are very hawkish statements, right? Way too high, hard, going in strong, right? I mean, big things, right? There's substantial upside risk to inflation. We got to act forcefully now. Consequences, right? And it's just getting crushed. The time to be forceful was like 6 raises ago. If you would have done your 0.75, right? Because they started raising before the U.S. did, and they're now a full percentage point behind. So kind of interesting how that laid out. But anyway, we got ISM today, and then tomorrow morning we got non-farm. This is where it gets funny, right? Non-farm data is rolling in. And I think right now, looking at non-farm data, this unemployment rate ticking up. I feel like that's an overstatement. I feel like it'll stay at 3.5. We saw more job hirings back. We saw kind of the hiring, the JOLTS number go up there. I don't know. I don't know what they're looking at. I don't know where their forecast is coming from. We haven't seen, the change in hirings. We haven't really seen it. I'm not exactly sure where they think that the 3.6 is coming up yet, because we've seen all the numbers go up, not the other direction. So I feel like this could be a 3.5 tomorrow. Who knows? Maybe it jumps to 3.7 and then they adjust it back down. But I just feel like, again, they've been off a little bit. I mean, you could see last time they're like, yup, 3.7. And then it was like, no, just kidding. It was a 3.5, right? So that's where I feel like we have the potential for that one happening. So yeah, but I love that. No, look, it's working. Just kidding, just kidding, right? The forecast 3.7. Nope. There's a little bit of a problem there. So yeah, so non-farm tomorrow morning. In all honesty, I don't think non-farm is going to be as big as it normally is. The reason why is because, again, we just had so much movement. Everything is all up in arms right now. For lack of a better word, the markets are angry, right? And again, it's not. I mean, it is definitely a predictable response, and this is what paying the piper's about, right? This is what paying the piper's about. All these claims and about, it's like, oh, listen, we lowered the deficit for over, the largest ever. It's like, well, yeah, but we'd never had a pandemic to the level we have before, in our time. So yeah, it's not surprising that you didn't spend as much because you didn't have to do all the pandemic stuff and the stimulus to people for checks that weren't working and for businesses. Of course it's less. But what have you done? 40-year high inflation, and you're driving us into a recession because you wanted to do those things. So yeah, not going to be a good election. That's going to be the next major market, market moving action thing that we have to watch. But with that being said, as bad as all this looks, and as much strength as the dollar is getting right now, and everything we saw with what Powell said yesterday, I mean, again, it's like completely overwhelmed here. I can't even go back. It's kind of like, where is it? Because everybody's so focused on the UK right now. Again, with everything that we got out of that statement, the one good thing is the way that the elections are basically forecast right now, that will actually be something that's considered positive for the market. So it's throwing an interesting twist. Doom and gloom is not here. It's actually coming down to the fact that if there is a flip of Congress, that's considered positive for the overall market. History's shown it. People like it. The market likes it. All the things that split provides is what the market loves. So yeah, it definitely provided an interesting scenario. And again, that's coming in. You guys know when election day is. Everybody's out now with like the I voted early voting, right? So it's there. All right, let's jump across to the chart. So let's look at the VIX first. Again, we talked about it yesterday. The VIX was going to creep up until the statement was out. And then once the statement was out, all the fear is gone. Not that it's a happy thing, but the fear was gone. And then boom, it just collapsed back down again. And now we're starting to rally up again. Things like, I think it was premature to think anybody, would be slowing down. And again, VIX crawling back up again is also partially due to everything being pretty deeply in the red. And yesterday we talked about NQ and Russell being the two most negative, the ones that were at the risk the most. And again, it's there. You're seeing it today. They are currently the two deepest, but that doesn't mean they stay there. I mean, I think technology, obviously, the biggest risk to technology. And again, this is one of those things, you think technology, it's like, well, they're not building cars. They don't need supplies. Well, they do sort of, right? They do sort of need chips, but understand technology is so based off of services. A very, very, very expensive dollar is not good for services companies that want to work with things overseas, right? And again, look where the population centers are overseas. It's not, again, people are not going to spend that money. They're going to go towards cheaper currencies instead of the dollar. So it's, technology is kind of in a weird spot. Russell's obviously the small guys. You start raising the rates on them. That's why they're moving. You're looking at all the commodities today. Obviously, the commodities are, again, the dollar up as much as it is. You see the commodities down. Gold had a great trade setup. Again, gold and silver were both awesome yesterday. Natural gas pulling back a little bit, which isn't bad. And again, crude pulling back a little. We're just under that $90 mark. I think there's a lot of pressures out there, but I think we mentioned it yesterday that kind of what has to happen was kind of bad for demand. Even though everything's been great, that we should probably see it start to roll back a little bit. I think that's fine. I still do think it jumps above 90. I think we end the year between 90 and 95 is what kind of my take is. Maybe we miss. Maybe it's like 89, 50 or something like that because that's, how the pit gang works. But I still think it's going to go higher. Like I said, OPEC's not going to mess around with any type of recession or anything else. And the U.S. can keep spouting off all they want. They can cut side deals and do everything. But It's not going to make much of a difference at this point. OPEC is basically, they've drawn their line in the sand and say, hey, listen, we're into this for money. It's not politics, it's money. And yeah, I mean, again, our economy was founded on capitalism. You can't have it here and then blame other people for doing the same exact thing. That's just not how the game works. And we're getting outmaneuvered. That's the sad reality of it. All right, let's jump over. Now, again, a lot of massiveness. So we talked about this potentially coming down, but what happened was we got the opposite. We held firm. We never pulled back down to that level. And what happened? The release came out, and what did it do? It gave us massive dollar weakness, right? And it's like, uh-oh. And we kind of went up, and we kind of based right at that level. And then the Powell statement came out. Now, ideally, we were talking about being at 65.07 or 63.76 because it just kind of died on us and it didn't really do anything. Like we were sitting here and it literally didn't move. We were like, nah, pull down a little bit. Give us that entry. We'd love that entry down here. Give it to us. It just kind of held firm. And actually, about 1 o'clock, it started to go up, 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 up. And it's like, oh, here we go. And then the data came out and you're like, wait a second. It was a 0.75. Why do we get dollar weakness? We talked about that yesterday, right? Remember, we talked about dollar weakness coming in because the market had already knew that was in. And then what happened? Powell came in and said, hey, we're not changing anything, guys. We're pedal to the metal, baby. And that's where we got this, obviously, this major push to the downside. So it kind of came out as predicted that we, again, the same thing we saw in the pound. The difference is, again, Powell statements are a lot more inflammatory than what, Bailey's are. But again, that's what I don't remember. I don't know if it's 4 now or 5 releases. Interest rate rise, and what do we see? Weakness come in because, again, it was already factored into the market. So, again, pretty easy setup. Now, again, we talked about levels and not being able to hold. Once this came up and actually started the base here, like, wait a second, this is probably going to reverse. And it did. Ideally, we wanted it all the way at top. We didn't get it, but once we got this little kind of stall candle right there, you're like, okay, we got now a definable level of risk. We could take this short. And, yeah, it did. It collapsed back down again. This was the other area we mentioned. Hey, if we could be there before news, we're interested in it. Look, when I continue it across, though, pretty funny that obviously the major news kind of stopped that one. And then what did it do? It kind of Harry Pottered on us, right? It took that old violated level. And again, that was pre-news. We were looking for that. Post-news, again, it was red. We were looking for a Harry Potter. We knew we had to take over the zone here. What did it do? It kind of came down, gave us some entries, came back and touched that same level, and all the way back down again. So now we're much, much lower. And again, I'll continue this across. This is old level from, the 24th of October. It's a 78.6, and it's where we were talking about a target. Well, if I bring it across, guess what we just ran into? Look at that. There's your target. So, we can start adjusting this around now. We can make some changes to it and start looking at, potential areas where we know we have some movement. In the next big area where we have buyers is all the way down below. We do kind of have a Harry Potter trade in here. And I'll tell you right now, for non-farm payroll, we just talked about that, the data coming in and this not being 3.6. Yeah, we need to live out west. That was the class. Yeah, I know. This right here, it's expected to go up. If it doesn't go up, that is strong for the dollar. So could we be setting up for a push and a breakthrough? We've just hit our target. Are we coming through here next? It's kind of set that way. So, again, we've hit it once, we've hit it again, and we've been getting deeper each time. Obviously, today it's going to kind of settle out a little bit. We'll bring it back down to 30. But you can see we're kind of bouncing around there, and we know that we do kind of have a Harry Potter trade sitting right here. And you may say, well, what is the catalyst? Are we gonna have that reversal now? We can. I mean, again, remember, a Harry Potter trade is looking for a violation of a previously, a previous zone, and we're looking for a break of it, a base, and a pullback. And that's that's literally what we got right here. Again, that was we talked about it being a pre-news move. It came in, and once it was a short, it was the target, not the entry. It shattered it. It went through. It based. It came back. It grabbed it, and then boom, it went all the way down to the next target level, which we had from 3 weeks ago. Okay, it stopped there. And again, there was the one Harry Potter we wanted to come over, and magically we have another one sitting right here. So overall, I'm going to move this profit target down. I'm going to say that our next target to the downside in the Aussie dollar is down here at 62.07. Again, we're waiting for the, when it finally does come through and break that level, and we get a little bit of a basing in there, we're looking for a short from 62.97. And you may say, well, how can I say that after all this movement? Well, I'm saying it right now because they're saying that the market is factoring in an increase in the unemployment rate. And I'm saying all the data thus far has looked pretty good. More people getting hired. I don't know. When you got more people being hired than expected, it's kind of hard for that unemployment rate to go higher, right? Like I said, this is kind of first-time unemployment. This is, if you look at this unemployment rate, right? Oh, I'm sorry. Yeah, this is no, it's not new. This is just the overall rate. More people unemployed seeking employment. Are more people seeking because the JOLTS data went up? Did companies magically be like, that's it, dump more jobs because we need more applications? I feel like what it is I feel like more people are getting hired. There's less people accepting new jobs, which also takes the unemployment rate down. So I feel like this is an overshoot. It stays at 3.5. That's more dollar strength, and there's your Aussie dollar going all the way down to 62.0. I mean, we do 10. Oh, I got Kip. He's not happy. There you go, right there. 62.10 for the Aussie. Aussie yen. So we talked about this yesterday also. Oh, you're happy. Oh, buddy. My buddy. Let's see. What are you going to get into? Here you go. You take this. What's this? Ooh, what's that? You want this? Here we go. The guessing game again. All little ant habitats. All right. So we talked about yen strength coming in. All right. Oh, he's already hitting buttons. Here's the FOMC statement. Right. We talked about whether being long down here. And again, you can see it started the turn at about 10:30 was the reversal point for the morning. And then it started to rally up. And there was the spike. God, we were so close. It hit this level here. Again, we missed it by a little bit. But I said, look for yen strength coming in. We got it. The yen strength came in. It drove it all the way back down again. So, and you can see the level here. It did pull back. It didn't give us a Harry Potter entry on that one. We can redraw some fibs on this one and bring it all the way down. Right now, I'd say it's not really in an area. We can take this one off. We can drag this level across, and that's what we're bouncing off of right now. What do you want, buddy? This? With this? This? With this? This is that? Is that what you want? I'm not sure what you're looking for. Do you want the Lego man? Here. You want the Lego man? You could not have the hammer. There's a hammer on my desk, and I think he's grabbing for the hammer. I'm like, nope, not the hammer. So we are in an area where there could be a potential reversal. At this point right now, again, the Aussie obviously not having the best of days. The yen strength coming in is there for a number of different reasons, predominantly with the, acting as a proxy right now. And this is something I think you're going to see all of them. I'd really like to form although we have a level here, it was tested pretty deep. It did stop the news, but it's not my favorite levels to get into. It is past the 50, and you can see the 61 is all the way down here. And there was a little hiccup, right? There's this rally at base, and it pulled up, and then came back and grabbed that again, and then took off to the top side. So there is something kind of in here. I'll put a horizontal line on it just so we can see it. There is going to be some hiccups in here, but really, I mean, maybe if we start getting a base in here, if we get a confirmation pattern, coming off this level here somewhere, maybe this is a reversal point, and maybe it's here, right? Maybe it's the monetary policy statement for the Aussie later on tonight. It's kind of one of those things. It's like, at this point, I think we wait for a new bottom. I mean, I do think we have a retracement in there. If anything, the monetary policy statement for me is the trigger. Right now, getting late in the week, and again, we really need to get the rest of the yen strength coming out of the market. Not much else we can do for it right now. The dog is going crazy. I think there's a tow truck here. Melissa should be able to handle it, though. The boy's mom tried to pick up the boys, and she was like, hey, I have a flat tire. And it's like really, really flat. She tried to drive out and like tore the wheel up. They showed up yesterday with a flatbed tow truck. And they're like, oh, do you have the keys? Because we have to put it in neutral. We can't drag it. I'm like, no. I'm like, I don't have keys. So I've had the boy's mom's car in my driveway for the last 2 days. The neighbor's like, what's going on? Like, she's got a flat tire, guys. There's no drama. So anything, 92.63 is where I think we could have that potential reversal. Again, there is a level here, but I think right now we need the 61.8ers to come in. I'd let this one go. Because of the way that it was formed, I don't really have a level that I like. There are buyers here. We know that they are. But I think there's better opportunity out there right now to trade. Euro dollar. Now, euro dollar, look at this one. So we talked about getting long before the news, right? And you can see down here, really at like 1 o'clock is where it took off. 1:30 is really where the level was. And again, this is at, hold on one sec, guys. I'm going to have to handle this real quick. I'm going to pause. I'm going to go to... I'll just mute it. Hold on one sec, guys. All right. Hello, hello. Yeah, no, the sound was gone for a second. I had to unplug it. I had to answer the phone real quick. Sorry. Yeah, the tow truck guy was here, so nobody else could hand a key outside except me, I guess, in the family. So I had to run it down. As I ran it down, he's driving away, and I had to call the boy's mom back and be like, "Hey, he's leaving. You're wasting my morning." And he supposedly got a state police call and was told that he had to go right now. I don't know what that means, but yeah. So yeah, when a tow truck driver pulls up, about to take your car, and then all of a sudden the state police call him and say he needs a report right now, I feel like there's some drama behind that story. But anyway, all right, so we're back. All right, so with price dropping back down again, I think in euro dollar, here was the pre-news move when we talked about it being a good level. Again, it hit it. This would have been an option-based strategy. We talked about the target up top coming in at 99.43. It did. It spiked right up into there, and that's where we had the same drama. Again, dropping down to a 15-minute chart. You can see this one, a little bit harder to play, but you're looking for a short. And it did. It just collapsed and pushed all the way back down again. So, again, another one of those kind of simple boom and boom. And again, what do we call for? Interest rate rise, dollar weakness. And we did. Euro dollar popped, and this is a nice little pop too. 104 pips up, and then now you can see, obviously, from where the peak was all the way up. I was kind of hoping if this one wasn't where the hold point was, we were going to get up to the 1. We didn't. There we go. 240 pips to the downside. Well, buddy. All right. So again, 240 pips to the... No, we can't have that. No, that's not for kids. That's not for boys. No, little boys can't touch that. Here. Little boys can't touch that. I keep telling myself, I love my kids. I love my kids. I love my kids. There we go. There we go. Look at that. There we go. Yeah, that wasn't a real tear. All right, so as far as what we do with this one now, obviously we can extend the fibs. Whoops, not that one. We can take that off. Obviously we can extend the fibs now and look to see if any magical levels pop up in there. You can see we do have a zone right where we are, and we're starting to run into kind of a bottom right here. There's not much there, but this is an area we've hit before, this 97.25. Kind of like a psychological level, just because of, the 25 in there. I would say right now, this one is kind of set up. I know they hit the screen again because I can't see my tabs. I forget how to do it now. All right, well, I'm not switching back and forth. This is what happens. I forget how to do it. I don't remember how to do it now. That's going to drive me nuts because I can tell that it's like all messed up now. He did it the other day and I fixed it, and now I don't remember how to do it. Yeah, it's not. Yeah, it was pretty funny, but not necessarily for me. All right, so again, we have a level that's coming in. Which one is it? Nope, it's not that. I really don't remember how to do it. I have to get it off the full screen thing. I honestly don't remember. Type it in chat if you guys remember. Is it? I don't remember. Yeah, if you guys remember how to get this out, there's like it's like a key. I think it's like a function something. I don't know. He obviously smashes the keyboard and it goes into like a full screen mode for this thing, and then I can't change it to any other. Oh, there we go. There we go. Got it back again. All right, never mind. Got it. I just had to put it up top. It's all sized correctly again. But I think 97.33 is a potential area for reversal. Again, we're close to that 10:30 time frame. This one actually, with the news coming in right now at 10 o'clock, let's see what it was. Is this going to make any changes for us today? Not really. It's lower than expected, coming in at 54.4. Again, it's no color change. It's not considered a move enough to really be a big difference. All right. So, again, will we get a reversal? We're probably there right now. Again, it is considered a little bit weak. Again, what I would say is if we can get a confirmation bounce, one of those color changes to give us a green, red, green, maybe kind of a failure to go lower in there, and then we establish new risk. Maybe it's in this level right here. But I would say start to look for this one to roll. Again, it's pushed far enough down, and we are running into levels that were pretty decent levels before. Not brand new, obviously tested in there, but it's been such a while. And again, if you want to see, I don't know. I mean, here we'll go to 2 hour, and then just to show you kind of like what how far outside we are. You can see right there. Look how wide it is, right? You don't really get necessarily a pinch in there, but I mean that's how wide it is right now, right? There's your channel right now. You can see we're obviously growing on the downside. Look how big the channel is compared to what we normally have, right? In here, I mean even the spike here, that was quick, and then yeah. So you can see we are definitely outside of the range. We should be rolling back into the range, kind of that reversion to the mean. And look, look at the little pinch, 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 boom, boom, boom. So. Bollinger Bands are fun. I like Bollinger Bands a lot. Definitely a fun indicator. Again, I'm not an indicator guy, but I do love the idea of them. Really focusing on statistics. I love them, right? All right, so yeah, I'd be looking for some type of reversal back again. We are outside of the mean, and again, we've had good data there. So we'll see that one goes. Euro dollar. So again, we were looking for this one to go down and then straight up. We were like, yep, we're talking about pound weakness coming in across the board. Interestingly enough, it did come back up again and then pulled back a little beforehand and then still took off. This V pattern, here, I'll remove this. I should leave it there. The V pattern did happen. The V pattern happened here. There's your V up and there was your spike higher. So the V happened. It just never pulled back for it. The pullback came in here from really that 530-ish window down and then monstrous move to the top side, a big takeoff. So it did come in just, oh, buddy, what are you doing? Which was that? Just a little bit, a little bit later. So right now, what do we do with the pound? Let's delete these so we can get a good view of the candles. Get this out of the way. Let's get this out of the way as well. All right. 61.8 slowed a little bit. You can see the wick on both sides there. Probably see it better on like a 15-minute candle. Yeah, you can see kind of the hiccup right there. We're going to remove that one. Don't need it anymore. Let's see. The 78's not doing much there. There's nothing really there at the 78. That's a pretend. I like the 87.71 better. Again, that's an extreme. All right, but this one is a confirmed level, so yeah, buddy. Hmm. 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 All right, let's pull this the other direction now. Yes, it's the same hiccup right there. Same hiccup is also the 23. So right now, as far as the euro pound goes, obviously there's a little bit of data coming back. We do have some more data coming in before the end of the week. Nothing absolutely major on this one. I would say we are a little bit kind of overextended at this point. I do think we are due for a reversal, but there is actually some, as far as on a technical standpoint, there is this wick over here, which we do like. That is kind of an entry that we use. I talk about it in the class. That would require a 30-something pip pullback. And the question is, do we come down and then take a bounce up top? I think with the right confirmation entry here, again, the fact that it is a wick over wick and it is a 23.6 and they're kind of almost overlapping directly, those tend to be a little bit higher quality of trades. Now, we are extended from the news. Again, fundamental changes in the market. I don't think it, I agree. It was weak, but I do think that pound strength will roll back in again. So, the two levels I'd be watching for, the other one being kind of down here. I think both levels are important to look at. How far apart are we here? 35? So right now, I would say that both these levels provide great opportunity. I think if we pull back, we could potentially take a long. If we pull back and start to chop and start basing through here, there is the potential for a Harry Potter short all the way back down to the 50%. Because again, if we break, this is one candle, right? If we break, this is one candle. There's plenty of opportunity in here south, right? I mean, this would be a 9 pip risk on that one. You're getting 27 the other direction. Your 1 to 3 is sitting right there. So you can see we do have the room for a short in there. If we do not pull back, if this is just kind of the impulse, the correction move back, and then we impulse forward, I would say, again, we are so extended. If we get all the way back up, that's quite a move. We look to get short 87.55. Okay, so we are pretty close to a couple different trade opportunities here. Now, if you are getting short, obviously you're taking profit the first time we hit this level right here. That'll be a green with a black writing. Could this be a long as well? It could be, but at this point, I really feel like if we start getting negative sentiment here, if we are unable in this next candle to get any higher, and then we start to print another red, that red, green, red, that is a confirmation of a trend change. It's in close enough proximity. I'm not necessarily going long from it because, again, we are overextended. This is a parabolic move. If I dropped it to like a daily or 4 hour, you would see it would be one solid candle straight up in the air. We are looking for a retracement back down to the origin of the move, which is here. Well, if we can take something and make some money in this area right here, that's absolutely what we want to do with it. Okay. Oops. There and there. Right. So let's see. I'm going to put that here. I'll put this yellow. And I'm actually going to stick an alert on this one. I like this one. I want to see what happens when we break through that level. And we'll go HP short. Okay. Yeah, I want to see what that does. Again, we may drive all the way up, and then I'm interested in the 87.55. But I am looking at this one right now, looking at the 86.91, and saying, if we can come in here and these 23 buyers don't step in, yeah, this is going down. If we can capture our 30 pips of the downside on that one, that's a great grab because, again, talking about being super aggressive and this much weakness, yeah, it was factored in, but I think there needs to be a bit more. They need to get a little bit. They need some more help. All right, Euro yen. So there's the Euro yen trade. Talked about it yesterday. We had the chop, and we're talking about a Harry Potter trade. Well, guess what? The 1 o'clock to 2 o'clock drove us straight into the zone, and there's the entry. There's the pullback. Remember, we did not get it. There's your base below. There's your pullback. There's your entry, and boom, there you're out. You were out late last night. This was a 70 pip runner. And again, if you're waiting for some type of reversal in this one, you probably would have got here. There was a green, a red, a green. All it did was pull back. It didn't go above. So depending on your trailing technique, you may have been able to continue running this one down. And actually, that pullback was right around the European session. So again, the original trade setup from yesterday afternoon, 70 pips in there, and again, helped. We talked about yen strength rolling in. That's exactly what we got. Yen weakness into the news, and boom. Major yen crashing on the other side. So, whoop, you're falling, buddy. Oh, there we go. Here, take this one too. Here, look, put this one in here. Here, put this one right. There we go. And you can take this one. Here, do this. There we go. And then this one will go right here. There we go. So where does this one stop? This one is very similar to the other yen pairs that we're seeing. We do have a zone much farther down here. It was the start of the move, but drawing a zone off this gigantic spike candle. Here, you can see right here. This spike, you're not really drawing much off of it. Yeah, it is a clearing. We know that this is 61.8. So I'd say right now, we're going to pull that one off. This is really where we're kind of targeting that this one comes down to. All right. Now, again, you did make the 70 in the overnight. You should be good there. But right now, this needs to move down another 40-something pips before we look for a potential reversal. It was marked as a target first, the 143.70. Look for a turns, flip, and push back to the top side. Pound dollar. All right, so pound dollar. Again, we were looking for this to go down. We had a Harry Potter trade here if we wanted it. What did we get? Well, here was the pre-news move. What did it do? It went up. We talked about 115.50, and guess where the reversal was? And it did not get stopped out, and it pushed all the way back down again. Now, it didn't give us the Harry Potter here, but we did get the nice bounce. We pulled down to that level right before news, popped up, grabbed it, all the way down. Now, if you were in this one, this is a monstrous move. This is up 416 pips from the news from yesterday. So Yeah, this is huge, 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 huge mover. And funny, look where it stopped right here, right? 786 is hit, and I would say really, I mean, there is some chop back and forth in here. I mean, I guess we can mark it off. I'll bring this down. There is some chop right there. Again, we blew that one's done. That one's done. A little bit of a chop here. Let's see. Yeah, that's what we're bouncing off of right now. So I'm going to pull this. Let's draw it on the other side. There's our Sunday night. Considering we said get short Sunday night, this position, if you were short from Sunday night and holding this as like a swing trade, you're up 478 pips. quite a big push to the downside. So let's draw it. We'll do it, and we'll do it from the top. Not gonna make that much of a difference. All right, so there we go. We're gonna talk about that level right there. Now, if this is the bottom, if we do start to kick back up again, I would say another kind of one of these Harry Potters right here, right? 112.54. And again, look for it to come down. This may just be a little bit of a hiccup. I do think it will continue to roll. And this one is kind of like a strong scenario, even though it's massive dollar strong. The dollar's obviously, the U.S. is in a better spot than the U.K., so it should win that battle. But as we get pullbacks, you look for more opportunities. But inherently, the pound, I would say the pound data was not as weak as the market is making it seem. But because they are 12 hours behind on the release, it's kind of hard because as you roll through from the profit taking to the other side of it, because you're rolling through from the profit side, everything that happens to one happens to the other one, just a little bit delayed. So that's kind of where the hard part about this one is. Pound yen. All right, so pound yen. We were hoping for a push, and it ended up breaking through that level and going much, much lower. And this was the hard one. We're like, maybe we'll get the strength out of this one. We didn't. It actually blew through. It based in there and then went through really super early. And then I guess yesterday, where are we at? Yesterday we're sitting in here. We never got the pop. We got the yen strength. I'm sorry, we got the yen weak. The yen strength coming back in again. And I said this one was going to be a little bit harder because we had the two sides of it. I would say right now, again, we should have removed that. I don't know why we didn't remove that yesterday. I feel like this one didn't save. Right now, look, we got a good spot there. This is the same problem. There's your touch, and that's what we're running into right now. So. All right, so right now, if this does decide to make a 1030 reversal bottom, there is a level that we want to look at sitting right here. It is kind of boxed in. What are you doing? It is kind of boxed in with the 23.6, so look for that level. It is quite a haul, though. Again, we're talking about 170 pips. It's within the daily ATR. The daily ATR is 250 right now. It is in the exaggerated state still, obviously because of everything going on. Interest rates do that. But I would say if this is an area where we start to kind of rally up again and then we don't go as low, this could be a trade that we retrace back up again. I think that the market has hurt the pound more than it actually. What? What are you doing? I think it's much weaker than it actually. They're making it much weaker than the reality of it actually is. So I would say that we are probably due for a reversal. But I do think that this level is important. Mark it off in your charts. 166.79. We'll make it completely flat. No, you cannot have that. That's glue. It's glue. Yeah, it's glue. See, you're totally fine. You're not crying. Yeah. Yeah, so again, kind of out. Like I said, I think there's been much easier and better opportunities on this one. But again, this is following the path of that yen strength coming back in. Now, dollar CAD. Look at the reversal on the dollar CAD. So we kind of came up. We were kind of sitting higher, like, oh, look at this. It pulled up and it didn't go any higher. It's like, wow, it was already set up inside of a short. We kind of didn't know where the short was, right? Here's the near-term short. It pushed down and kind of came up before news. And it's like, this is a short trade. And it did. It spiked down, came all the way back up, and you can see now, again, we kind of bounced off this level. I would say for dollar CAD, there's really, let's put all these out because and again, we talked about this not holding. It didn't. It went down and grabbed the sellers here. Right there is where we grabbed. So again, made sense there. Right now, let's see. I think I would actually move this down. We're going to put a new there. Dun, dun, dun. We're going to put that there. And again, you can see all the way back to the origin move is 1 to 8 or 1 to 9. 1 to 3 is only right there. Okay. So I was afraid we weren't going to be able to see it. We'll leave it right there, right now. All right. Again, if we see a reversal here, not surprised whatsoever. 61.8. There's not really not really anything technical on it. There you go. So, B said that inflating peaks fourth quarter. Everybody's saying that right now, Jeff. Everybody thinks that that's when it's peaking, right? EU said the same thing. You know, they said that they are not at a peak yet, but they see it peaking in December. So everybody's saying that. I think, I think what they mean by peak is it's not going to, remember, right now we saw a lot of inflation coming in last year. So we're seeing the 10.4, 10.5. I don't think inflation is done at that point, but I think we pull back from that 10%, if that makes sense, because remember that 10% is a year over year basis, right? Yeah, it's slowing. We're not getting the 1.5%, 2% every month. And if we don't carry that same 1.5% to 2% this time, we're not going to maintain that 10%, right? It will artificially on a year over year basis. Oh, it'll be 7%. Yes. But if you take that over like a 2-year basis, it's like 15% or 20%. So it's not really, at this point, you need to look at it more on a monthly basis, not a year over year. The year over year is the big headline. And that's what everybody's like, oh my God, we're at 10.7. Yeah. But again, when it's up, you got to kind of look from the start. And this is that same type of cherry picking, right? Like, data is easy to cherry pick. If you literally, I'm not going to say any names, but when you come in at the bottom, right? The bottom was your second month in the presidency. Your presidency looks great. What you did had nothing to do with the recovery because all the recovery was put in. That's how the bottom was put in. All the recovery measures were put in. All the processes were put in before you got there. And then you get there at the bottom, right? But the processes were already working. Processes are not instantaneous. It's kind of the same thing, right? The same type of V curve. So yes, the peak, the 10-year, the year over year peak is there, but it's not like we're back down to zero inflation. Everybody knows that, right? And even if we are, we're still 10% higher than what we should be, right? Or 8 or 9% higher, whatever it is. Because again, the mandate is supposed to be 2%. And we've been running hot now for 2 or 3 years. And what is it going to take? Are we going to see deflation? Are things going to go back down in price? I don't know. Yep. Same as 2009. Yeah, it's the same thing. Yeah. It's easy to make statements after, when you're at the bottom or the top, right? Oh my God, it ruined the economy. It's like, okay, right? I recovered everything. Well, you've recovered jobs that were lost. You didn't build any jobs, first off, so it's hard to say that you're a builder when you just recovered. Yeah. That's how it is. So with dollar CAD turning right now, again, we are at 1020. This is a very kind of high probability term. I'd like to see what it does in the 50. I wouldn't trade off of that 50. Again, that 50 was for the other direction and short. It did base there, so you probably will have some basing. It's not quite large enough for Harry Potter, but if we are able to come back down again in the next 24 hours, there are 2 levels in here. And if you remember from earlier on, I do think that we're going to have something here. I think we're going to have a dollar push. Well, either of these 2 zones, this one probably not. There is a potential. This is a decent bottom. I don't think we're getting all the way down here to sellers. Basically we have this level to take a news trade off of, or really this level down here. Those are our two news-based levels. Are we going to go 215 pips with no more news from now till non-farm payroll time tomorrow? Probably not. So this may give us the only opportunity to find an area of long, which is about 85 pips. Can we curl back 85? Sure, we could probably curl back 85 pips from now till tomorrow. And like I said, I still believe that number comes in at 3.5. And, maybe because, we know that there are some people that listen to the stream, right? Maybe they come back in at a 3.7, but then they're going to readjust it again. I think it's at 3.5, which would give us dollar strength. So again, if we come down for the news right here, right, there's non-farm. Right? Non-farm, if we come down to this level, that could absolutely be a long. Okay, so watch out for them. I think this non-farm trade is, again, I think we go dollar strong tomorrow into that release. Oh, I just moved this. Did I move it? Okay, I did not. All right. So we had drawn this top over here, saying it was kind of a little bit of a big level. As you can see, we had the spike down. How's that? We spiked right into that level at the 6.18, grabbed it, and whoop, reversal right off, and we broke the top side, and we came back and touched it, and Harry Pottered it to the top side. Isn't it amazing how that works? Right? And again, we talked about this too not being great, but there was your pre-news move. We said that, yeah, it's a level, but if we can get there for news, that's a decent level to take it short. And you can see there's your red candle. What did it do? Went all the way down here and closed all the way down here. So there was your original trade, and then there was your reversal back again. And then after this broke, because again, 1, 2, 3, obviously 4, we broke it, we pulled back. If you missed it here, you got it here, and then you took it off to the top side. So not a bad trade. And actually, look, you see the pullbacks coming into here. So a lot of fun back and forth on this one. Dollar Swiss actually turned out to be pretty fun tomorrow, or yesterday. So can't deny it. As much as I would like to say, nah, that pair sucks. It was good. And again, now we're reversing out of the top. So this is a level we mentioned yesterday, this 101.49, 101.23. It is a parabolic move based off of what we had. Actually, this is more in the overnight. I do think this one comes and rolls back down again. The question is, when will the buyer step in? I think this 50% level is important. There's a few little hiccups in here, but that's really where you want to take profit. It also happens to be where the 50 is, so I'd probably move it just in front of the 50 to guarantee that you get out of a position. And I say guarantee, I mean basically get yourself out before the buyers come back into the market. That's kind of where you're at, right? Um, sorry. Yeah, so 101.35 is probably where I'd say, hey, listen, get profit on the short. I think it's decent. We are going to see dollar profit taking right now, but again, kind of the same thing. If we can crank all the way back down again, it's only 80 pips. It's got a daily ATR of 104. Absolutely can provide some opportunity to get long in this position. So yeah, look for this. Get profit first. Look for a bounce. And again, we already know where the news release is. I can mark this here. And right there is kind of where it's coming in. All right. Dollar yen. I said dollar yen would be hard to play, right? And again, we're coasting through that level. We knew we weren't trading off of it. Big spike down, broke through the 78, came back up, came back down again to the same level where we were, and then kind of pushed off and we're going back down. Unfortunately, we didn't touch the top side. We did grab the level right here, and again, did not get stopped out had you used it. It was a 1-2, and then this is kind of your third hit, and really your fourth hit is what turned it. But again, that was kind of the opening area. Again, I brought it up yesterday. I just want to bring it up again. The dollar yen is extremely hard to play. It is officially the carry trade right now. So again, there's extra money that went into it. And if you look at this one and you say, oh, listen, in 24 hours, it's moved only 72 pips. And what's it doing? It's running right back down to where we were yesterday. But how can like the pound yen be down like, 350? Well, it's because you have strength on both sides. You have a strong dollar right now and strong yen based off a currency pair. So that's kind of what you're saying. So, yeah, I would say right now look for some stabilization. We do know that we're cleared down to this 145.80 range. I think the 148.56 at the top side is good. If anything, look for a break of 147. We know we got kind of a more near-term level here. All right, we know we bounced off of it, so we know it was an area that, again, an old area that has become a new level. But we still do kind of have a Harry Potter here. So, I would say this is probably not a bad trade. 1 to 3 right there. 1 to 3 is right there. Yeah, so we're within range. I mean, we're within range. We this is probably like I don't think I would go into this trade going into non-farm payroll, right? But what I would say is, again, if we can come down and base in this level, this 146.89 could be a decent area. Now, it is 27 pips worth of risk. That's a lot for this pair. 79 in the other direction looks great. It's just because this spike back and forth, I mean, this is 230 pips. It's over a daily ATR, even with the kind of extra large ATR right now. Kind of large. So it makes everything a little bit bigger. All right. Ooh, I just sneezed. I covered the mic. So there's, again, we mentioned Bitcoin. Again, the immediate response was dollar weakness. Hate to say this, but look at that. That's where your last big push was based off of this chop. This was higher, so you weren't using it. There was your ascending candles or descending candles. There you go. Yeah. Can Bitcoin be traded on a technical basis? I believe so. Your 1 to 3 is right there. So there you go. I mean, again, this is not a level, right? You're not using it as a level. This lower, 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 explosion. That's a level. So yeah. Yeah. Right now, I think Bitcoin stabilizes. Again, if I bring this across, you can see not only did it hit once, it hit a second time. So we know that 20,000 is a big level. Right now, with that dollar weakness, makes sense. Again, non-farm payroll tomorrow, if it comes in at 3.5, that's dollar strength. This should be a short to the downside. Ethereum should be the exact same thing. And oh, by the way, it's the same, right? There's your ascending top. And magically, ding, 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 ding. And again, depending on how you drew this, right there's the bottom of the red. So same idea. Spike with the dollar, wait for Powell to talk, and then boom. And look, we talked about 1,500. Look how close we made it to 1,500. Look at that. That was the other side. Bitcoin, we talked about. What did we talk about? I think we talked about 20. Yeah, 20 was actually 20 is right here. So we got pretty close to 20. I talked about 1,500 right there, and then Avi Doji. Doji actually is the best one. It held firm. I think Doji is. I believe that Doji's on a cliff though. I believe this is like the Grand Canyon. We're looking at it, and I think it comes back down again. TLT. We knew TLT was going to jump. Talked about it right there. What did it do? It drove up, and then boom, gap down, and then gap down again today. Dropped about $3 in TLT. I think non-farm is a very similar scenario tomorrow. I do think if it comes in strong at the 3.5, I do think this turns and rolls back to the downside. So watch out for it. Oil. So oil. Let's see. Yesterday morning we were here. 10:30 we did reverse. It did go back up higher and then kind of put a top in. You can see this one. Right here is kind of where the interest rate came in. We talked about getting short again, raising interest rates kind of is like leading us more towards that recessionary, practices. And we talked about a pullback, and it is pulled back down again. It's kind of doing exactly what we expected. It's running back into the same buyers right now. Again, we talked about this not really being like a non-farm setup or anything. That's kind of where we're at with it, right? I mean, if anything, we're rolling into the weekend. I do think non-farm is going to matter. A lot of people are like, oh, 3.5, that's great, right? Yeah, I would say that there's probably a buying opportunity for tomorrow. But right now for oil, I'm kind of want to let it stabilize and kind of go into the new week. Like I said, big interest rate and non-farm all in the same week with oil. We've already kind of had the movement. Holding up here is good. I still think 90.93 is the next area. We were really looking for a short. And for some reason, if we can push all the way down to 85.64 over the weekend, I think both of these are decent for next week. But right now, again, is there anything, propping this up right now? Not really. Right, there's your confirmation. There's your 1. There's your 2. There's your 3. There's your 4. It shouldn't hold, but there's a little backstop right there and a drop. So, I mean, I don't know if you really, really want to get into oil. I would say a break of 87.22, drop it down to 85.64 is probably what's going to happen. Could it take a bounce off of here again? Sure, but it's going to run into the same issues up top. We can actually take this over here if you want, and you can adjust this to more of a near term piece right there. All right, so. Kind of where we're with oil. Natural gas, again, there's where the news came out, right? It was a parabolic move, a parabolic retracement back, and kind of the same thing. Recession, not really necessarily great for commodities. It pushed and turned. No, sound is not gone. I can see it moving. If it's gone, then I don't know. It could be you. Maybe old age got you, Neuro. The hearing aid battery. Did you hear beeping before the sound went, Neuro? Maybe it's the hearing aid, right? Maybe. The Bluetooth went out? I don't think it's me. If it's me, I apologize. And for anybody out there that has hearing problems, I do apologize also. But I can say that about Neuro. Neuro is into death metal bands. He doesn't wear he doesn't wear earplugs or any of that stuff. He's too cool for that, right? So again, do you think he's ever been to a concert a little bit too close to the speaker? Probably. So again, I can pick on him. He's probably got, Neuro probably has hearing loss equivalent to a B-52 gunner, one of those guys with the machine guns and that little ball turret. Probably the same thing. That's what I'm saying. But he knows I love him, so it's all good, right? He knows I love him. Oh God, I got Melissa grabbed Kip, and now there's I turn around, and it's like a bomb exploded in the room. All right, so. Natural gas, kind of the same feeling with oil, probably comes back down again. We know we have some buyers sitting probably in this level right here. We've already kind of seen them go off of it. I'd like to see it kind of stabilize. I do think probably going into tomorrow, unless there's some type of geopolitical event, it probably is another red day. A little bit more negative. Again, I do think that non-farm number is going to be decent. Gold. So gold, we boxed this off yesterday during the session, right? And we talked about this one turning and rolling to the downside. And it was a little bit deep, right? We kind of drew it right here. And you can see it came all the way down. And then all of a sudden, it's stabilized where there's buyers, absolutely. And then it came across, and again, we talked about that dollar weakness trade coming in, that it looked like it was going to be dollar weak. And guess what? Boom. Now, I'm going to remove this, okay? This is proof that the Pitback gang exists in gold too. What were we talking about? We said, look, we got a lot of chop up here. We got a test there, a little test there, 1760. This is one of those ones, if you bring it down to a 15, you're like, oh, God, it's basing. Oh, I want to get short. I want to get short. And bam, all the way down. So if you were in yesterday's session, we said that, hey, listen, overall, it is a very bearish gold day, but we're seeing dollar weakness. And if that dollar weakness comes in, any pause, it's going up. And it did. It went up, and then Powell's like, we're not putting the brakes on. And then it followed directly where it's supposed to go, right? What did it do? Came down at base right off a level. It came in. It hit it. It came back in at base again. It used it, and then it went all the way down. And when I drew the target, we said 1620 was our target on the day. There we go. We hit 1620 at 5:30 this morning. All right, so hopefully you guys were able to get into gold. As I said, using options with that one was pretty decent. There wasn't as much jack into it, but very, very easy gold setup. And again, that 1620 was tagged. We're at 1624 right now. Again, some of these old violated levels, we don't necessarily need them as much. We can throw some fibs on here if you really want. Bring it down, and you can see, yes, there are some levels there, and I just kind of deleted one from it. But there's a little confirmation right there. Again, if you're looking for a gold position, this could be a potential gold trade at 1627.07. I think it's a decent pullback level. I do think non-farm tomorrow, again, it comes in 3.5. That is dollar strength. That would, again, lead us back to the downside. Could be another short opportunity, but there's a lot from now till then. The European session, everything else. This is a potential U.S. session-based trade. I do think if sound pushes back up, or sound. See, look at this. No, you're messing me all up today. If gold prices push back up tomorrow before non-farm, I would be looking to get short non-farm beforehand. Silver. We talked about it being down. Now, how about this? Look at this. Look at this. Remove this. Now, again, what did we do? We talked about dollar negativity. And I even drew it like, oh, as soon as Powell talks, boom, right back down. Bam, drove right up to there to the $20 mark. It based. It's like, yeah. Now, it did do a little whipsaw up top, which, again, is pretty common. And then, boom, collapsed all the way down. We talked about a target of 1937. Not only did it come down at base and kind of gave us a Harry Potter, too. And now we've retraced a bit. So, again, we could delete a lot of these. We've retraced back. We knew we had levels down here. This was our profit target overall, and we got all the way back down there. Now, let's see. We'll delete this. This profit target is hit. This is hit. This is hit. These are old ones. Take those out. All right. So, we know we got some buyers. Again, let's pull this off. We'll just grab these guys here. Again, not my favorite of levels here, but that's what we ran into. Right now, I would say right now, silver is kind of in a short trade setup right there. We are just a little bit deep into it. Let's throw that on. And this is kind of like exactly what we did with gold yesterday. We just kind of missed the entry on there, but if there's a little pullback, again, when we drew gold, it was right here. We're drawing silver right now in that same level. I don't think this is a fib, but I could be wrong. Oh, it is backstopped by the 50, so it could be. So, not a bad little silver trade. And again, makes sense. Profit target should be right here. All right, there's where your profit target is. All right, for silver. Okay. Let's see. Apple, not a good day. Again, nice little pop with a market. Twitter, Twitter did okay with it. And then same pop. All right, let's see. Now again, today, easy enough. With something as big as everything we've had in the last 24 hours, right? And then again, with services, right? Unemployment claims coming in. Is today the ideal opportunity? Not necessarily, but not horrible. So what we saw, 945. Yeah, we saw an initial push down and a retrace. So we're basically flat from the open. Yes, obviously we're down from yesterday, but so much of this is, again, going to be manipulated. The reason why you saw the immediate reversal on this one and coming at 10 o'clock is because once this broke overnight lows everybody and their brother literally is like, oh, got to short. It's going to be a horrible day. And that's why it went straight back up so they could stop everybody out. Here's what the news is. I mean, kind of funny, right? So there was that kind of, that position was out ahead of time. And I'll remove this. And again, what did the market do? Oh my God, this is great. Dollar weakness. And then all of a sudden he talked and whoop, right back down again. And our target was 37.96 yesterday. We obviously crushed through that target yesterday. Where we are now, let's see, we'll run it all the way up just to kind of get an idea. Yeah, we're at the 78, so it's not a run-up deal anymore. Run back down again. And for me, the reason I asked the question is like, oh, was this an opening print trade today? I would say not really, because so many people were reacting to it in the overnight. Again, that interest rate rise was such a big thing, and then Powell speaking afterwards, right at the close of the market. Really kind of a hard thing to be able to judge. And there was the responses to everything overnight. Because remember, we hadn't had a full kind of European session to deal with it. I would say overall, my opinion, yes, would have been more negative today. Taking an opening print trade at the just not there. There was nothing there. I would say if anything, there was a pullback level. But that pullback level didn't really even come in until kind of where we are right now, right? Like it runs, I don't even think small fib wise. Small fib wise, there could have been a case made, but it didn't hit it. So as far as the opening print goes, I would say there's no entry on ES today. My overall feeling would have been, yes, it was negative. Again, the lag of saying, oh my God, we're going to raise it 2 more times. It's going to be negative. But as far as our rules for opening print, there wasn't really necessarily any entry today in this one. But again, if you were able to trade this yesterday, again, all the targets were smashed. All the targets were hit. Same thing. We talked about this coming down. We talked about 11,000. If you remember, I said 11,000 is where we're looking. The first push came down, and here's the first target. You see we based there. And then what happened by 3 o'clock in the afternoon, or by 2:30, we had crushed through that 11,000 mark. Did the same thing, popped up, and again, this was an old level. We weren't really looking for it. But once it came up and popped, you're like, oh God, if it goes through, and it did. Parabolic move up, and then he talked, and boom, right to the downside. And we're much, much past. As far as opening print goes, opening print is here. We kind of pulled up. I would say that there was really no, again, the 9 o'clock was up. The 9:15 was down, which is not really what we're looking to do. Again, I would have expected negative today. All it's doing is stopping out everybody that had that negative opinion. So yes, it is down 1%, but the opening print, again, the market opened right there. So I love that one. Like, oh my God, we're down 1%. Yeah, we're down from the close, but here's this morning. What's the sentiment this morning? Is it up or down? Right? Everybody that shorted at the open because of the interest rates got stopped out, and now it's coming back down, and we're literally flat on the morning, right? So, yeah, right. That's why this number is a little bit, the percentage is misleading. Overall, I would like to see a bottom put in. I do think that NQ and Russell are at the most at risk, so be super cautious with those 2 things. YM, again, the same trade setup. Look at this. Came up. Now, this one missed by a little bit, right? So, here's where kind of our top was. You can see it did the same thing. It just kind of based. We're like, oh, please base and then go lower. We mentioned targets down here at 32,000. Well, there's our 32,000 hit, right? 32,000 is out. Didn't quite make it in the first shot, but again, 32.41 was our first hit. Pulled back, came down, and got really close. 32.89 is kind of where we were last night. And then again, in the overnight, obviously, the 7:15, we ended up breaking through. So kind of the same thinking. Again, we were calling for a short on this one as well. And again, lovely, lovely pop. Lovely pop the way that it did it. And again, we can mark the top off now. It gives us kind of a new level up top. Right now, where do we stop? Well, kind of funny. We talked about this here. I mean, there's a black line on it, and we just kind of bounced off of it. So opening print, yes or no? There may actually, you know what? There actually could have been an argument on this one. No, actually, you wouldn't have. It would have been now. Yeah, because it would have been here, nothing here, nothing here. It did pull back into this zone, right? That's your 930. So potentially now it's a level. I got to say, potentially this one you could have traded. Because again, there's the 8 down. The 9 kind of drove us back up into that same thing. So, yeah, I would say, this one would have qualified, right? We did have a level of basing, and then we pulled away base and then pulled back ahead of time. Did it hit? Yeah, there's 1 of 3. So, yeah, it did trigger. So, okay, we did have one. right? ES was a no, NQ was a no. There was never any pullback or anything. This one actually had a decent level of basing in there. So there, we got one. Russell, I know that it didn't. I was looking at Russell. Russell got close. If you were drawing it right there, you can see that Russell got close, but I'll tell you right now, it didn't trigger. It looks really, really close, and again, it does come back up at the same spot. Depending on your broker, it didn't trigger. It's nice to think that it would have, but it didn't. This is a pip bet, gang. I won't even tell you how close it missed by, but it missed. And right now, if you look to see where the opening print was for the day, the 930 candle is right there. So this is where price opened, and you can say, "Oh my God, we're down 0.6. It's a bad day." Really? Because we are positive since the trading market opened. Not compared to yesterday morning, but for where we opened today, it's been more positive mindset. You're like, wait, what? Really? That's because everybody's trying to get short, is what it is. Okay. Now, yesterday we talked about 1800 being the target, and as you can see at 315, we tagged our 18 target. It did the same thing. It rallied up. It grabbed the top. I don't think it grabbed there yet. It grabbed this level here. But again, we popped on a 15-minute basis. We had one candle where we paused, and it's like, oh, if it goes, it's going, and it did. Pal talk, we came all the way down. We smashed our 1800. All right. I think right now, we rally back up, and I wouldn't be surprised if we start to hold and maintain on this 1800 mark. Again, big psychological level. It's a major level like 20,000 is. 1800 is big. So do we come up and start the base and then, again, is this preparation for non-farm tomorrow? It could be. It could be. I think overall, all three indices-wise, I think non-farm is more of a short base trade tomorrow. Again, I keep saying it. I think 3.5 is what we see. I have no basis. I have no inside information. I do not have a crystal ball. I have not sold my soul to the devil, at least for this. But I feel like 3.5 with all the numbers we've seen is probably what's coming in. Like I said, there's many more smarter people out there. All those really intelligent folks that were, into that transitory thing that I was never smart enough to claim that we had transitory inflation. There are people definitely much smarter than me, but I feel like 3.5 is, really kind of what's happening. Yeah. Again, just my opinion, right? Just my opinion. Like I said, many people out there smarter than me, but I think 3.5 is coming in. I think there'll be a little bit of dollar strength, and I think that's where we're at. All right, so that's it for today. Again, kind of a fun morning. We're starting to see things kind of get mixed up in here and kind of flipping back and forth. You can see natural gas. We had another build on there, right? Look at this pound slide build after economic recession warning. The BOE is already in a recession, right? The UK is already in a recession, so I love they're like warning it. I would expect its recession to last all of 2023 and half of 2024. Yeah. So, you know what? I don't feel like anybody, I don't feel like anybody questioned that, right? Oh, no, you're going to be out by January 2023. Oh, yeah. The UK's had so many problems. Not surprised. Maybe they didn't think it was going to go into 2023 or 2024, but not really surprised by that whatsoever. That came out 23 minutes ago. Hold on. OPEC implemented policies aimed at reducing reliance on all forms of oil. Okay. Recent issue is oil markets volatility, demand and supply unbalanced to significant decline in investments. Yeah, true. Again, they're there to make money. OPEC's expectations indicate increase in energy demand by about 23% in 2045. Yeah, I'm sure all the Yeah. And again, OPEC's a little bit overzealous in these kind of things, but hey, more power to them, right? More power to them. Go OPEC. All right. So with that said, I'm out of here for the day. Let's go ahead and do our drawing. Sean won it yesterday. Briggs, good seeing you back, buddy. I know you've been super busy and you've been trying to catch him, but good seeing you back on here. Let's close it down and let's see who takes it. Yesterday, it was Sean yesterday, right? I'm pretty sure it was Sean. But I'll check that, but I'm almost positive it was Sean yesterday. Anyway, let's close it down. Winner of today's drawing is Nadex. Now, it definitely wasn't Ernest yesterday, so we know that there's no duplicate, so it doesn't matter. Yesterday, Ernest was sleeping, and we did go in early yesterday, right? We did go in early, but again, Ernest does still have his moderator hacks on, so, sometimes, Ernest does, strip out one there with, a win. So, there you go. He snuck it in today. But again, Ernest has been betting big, so he's losing some ground here on people. Eki is starting to chase and get on his heels there. Sean has passed him, right? Debbie is getting a good hold on top of Neuro right now. And then again, the space up top is advancing a little bit yet. So, no, you did not win yesterday. You did not win yesterday. I know you didn't. You weren't here. I even made a comment about it, Ernest. I was like, hey, you know what? Like, Ernest is not, he's not even here today. He can't win if he doesn't show up, So I even made the comment. I gave you a chance. Gave you a chance, my friend. All right, I'm out of here. I'll catch you guys tomorrow morning, 9:30 Eastern Standard Time. If by some random chance I can log on earlier, I will, just so we can kind of, hopefully maybe get into something for non-farm. Most likely there will not be any opening prints tomorrow, just because non-farm is going to be big. And like I said, I think 3.5. So, all right, with that said, I'm out of here. Have a good trading day today. I'll catch you guys tomorrow morning, and I'll see you then. Take care.